Welcome to This Explainer. Today, we're taking PVH Corp's dense Q1 earnings report and turning it into a real story. It's a tale of navigating some incredibly fierce global headwinds while fiercely protecting their iconic brands. Now, if you follow the retail space at all, you already know the global apparel market right now is, well, anything but predictable, right? So today, we're breaking down exactly how a massive fashion conglomerate actually maneuvers through these turbulent waters. Let's get right into it. To kick things off, the big headline number here is a massive, expectation-beating $2 billion in first quarter revenue. To be exact, they hit $2.025 billion, which actually beat their own guidance. I mean, think about the current retail environment. So many players are struggling just to stay flat. So printing a clean $2 billion, that is a serious statement of intent. But honestly, what's even more impressive is the 6% growth in their direct-to-consumer revenues. This isn't just wholesale numbers shifting around on a spreadsheet. This is real, tangible growth across both their physical owned and operated stores and their e-commerce platforms. What this tells us is that consumers are actively seeking out these brands. They aren't just stumbling upon them while wandering through a department store. Okay, so let's really dive into this. We need to explore exactly how the parent company of Calvin Klein and Tommy Hilfiger is pulling off these results in what is a highly dynamic and, frankly, pretty challenging operating environment. We're going to look under the hood at their strategy, the hurdles they're facing, and honestly, some rather ingenious back-office moves they're making to keep the whole ship steady. Now, a recent quote from CEO Stefan Larsson is pretty much our roadmap for this explainer. It perfectly sets up this classic business tension. So on one side, you've got internal brand strength, right? These are the things PVH can actually control: product quality, marketing, the whole consumer experience. But then on the other side, you have these external macro pressures, things like geopolitical events and inflation that are completely out of their hands. It's literally the ultimate balancing act. Section 1, Force 1, Brand Momentum. Let's get into it. When you look at the massive global footprint of their two primary engines, Tommy Hilfiger brought in over $1.07 billion, and Calvin Klein wasn't far behind at $895 million. These two titan brands are driving the vast majority of that headline $2 billion in revenue we just talked about. Their heritage brand segment, it's really just a tiny sliver in comparison. So the health of the entire PVH Corporation is inherently completely tied to the health of Tommy and Calvin. The core strategy driving all these numbers points straight back to their disciplined execution of what they call the PVH Plus plan. They've successfully elevated the whole consumer experience to attract new shoppers across literally all regions. We are talking about these massive, enhanced 360-degree spring marketing campaigns. They're focusing sharply on what they term their power consumer segments, and this is happening right alongside stepped-up investments in both e-commerce and physical store renovations. Basically, they are investing heavily in exactly how you and I interact with their brands. So here is the absolutely crucial point. They aren't just trying to sell more of everything across the board. No, they're strategically scaling very specific hero products to absolutely dominate those categories. For Calvin Klein, they're leaning hard into their legacy strengths. We're talking denim and underwear. And for Tommy Hilfiger, the focus is heavily on sweaters and outerwear. By growing these specific hero categories across both physical stores and online, they manage to cut right through the noise and give consumers a very, very clear reason to hit that buy button. Section 2, Force 2, Macro Headwinds. Now, when we look globally, there's a really stark geographic contrast in their performance. And just to be clear, we're looking at constant currency revenue here, just to strip out all that messy foreign exchange noise. APAC, the Asia-Pacific region, is up an impressive 6%. The Americas are down slightly, about 2%. But look at EMEA, Europe, the Middle East, and Africa. It's down a pretty significant 5%. Europe right now is actually acting as a major drag on their overall global business. To truly understand what's happening with these regional numbers, we have to look at the specific friction points. Okay, so APAC looked great, right? But it was heavily aided by a 4% favorable impact just because of the timing of the Lunar New Year falling in Q1 this year. In the Americas, wholesale shipments basically shifted to the second half of the year, which dragged numbers down a bit, though those strong direct-to-consumer sales we talked about definitely helped offset that. But guys, the real story here is EMEA. PVH explicitly notes that geopolitical conflicts in the Middle East are creating these much broader macroeconomic effects, and that is directly putting downward pressure on consumer demand in that entire region. And this brings us to a really fascinating business puzzle. Think about it. If your second force, these big macro headwinds, is dragging down European revenue and even lowering your full-year top-line outlook, how exactly is PVH still maintaining a really healthy 8.8% operating margin? I mean, usually when revenue drops, margins get absolutely crushed because, well, your fixed costs stay exactly the same. So what gives? Well, the answer is basically a massive deus ex machina straight out of the financial world. It is a $100 million tariff refund. Yeah, you heard that right. This refund actually relates to previously paid IEPA tariffs, which are basically historical trade penalty fees, and it serves as a completely crucial margin rescue operation for the company right now. It is honestly an incredible example of just how vital the back office and legal teams are to modern retailers' bottom line. Okay, let's geek out on this math for a second because it perfectly illustrates how this massive refund essentially absorbs all the shocks from those broader macroeconomic pressures. So PVH is currently facing a pretty painful 15% blended tariff rate on goods coming into the US. That hits their gross margin by a massive 215 basis points, or 2.15%. Now, they do have some internal mitigation actions to sort of fight that, but the real hero of the story is this $100 million refund. It injects an estimated 100 basis points, a full 1% of pure positive impact right back into their margins. So the net result of all this, despite that EMEA revenue drop and despite the ongoing US tariff pain, their overall operating margin stays perfectly unchanged at approximately 8.8%. Section 3, the 2026 road ahead. Let's look at what's next. Management is explicitly adjusting to the moment here. They're fully committing to keeping inventory tight, and actually, it's already down 5% year over year, which is great, and they're strengthening their data and demand-driven operating models. But here is the crucial part. They are not cutting back on the brands themselves. They're doing this really impressive balancing act, a highly disciplined approach to managing expenses on one hand, coupled with continued high-value brand investments on the other. They want to support the long-term growth of Calvin Klein and Tommy Hilfiger, even as they have to lower their overall revenue expectations. You can actually clearly see the stark contrast of that EMEA slowdown playing out in their updated numbers. Their previous outlook called for a slight increase in revenue, but their updated outlook now expects it to be approximately flat, and honestly, they expect it to decrease slightly on a constant currency basis. But wait, look at the operating margin line at the bottom. It is completely untouched at 8.8%. That tariff refund effectively bought them the exact financial breathing room they needed to absorb this entire geopolitical shock without having to sacrifice their profitability. And that leaves us with this final, honestly pretty provocative thought to ponder about the sheer resilience it takes to run a global apparel conglomerate today. Because think about it, PVH is doing everything right on the front end, right? Great marketing, strategic hero products, solid DTC growth. But ultimately, it was a highly strategic back-office tariff refund that totally saved their margin profile for the year. It really makes you wonder, in today's incredibly volatile global market, are global retailers going to have to increasingly rely on this kind of massive back-office financial agility just to survive these front-facing geopolitical slumps? It's a fascinating dynamic for sure, and one we are absolutely going to keep our eyes on. Thanks so much for joining me for this explainer today, and keep learning.